General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS.
Hey there, welcome to this week's edition of Bulls vs Bears. JT, how are you, mate?
I'm good, thanks, Mark, and hi, viewers and listeners.
And viewers and listeners, yes. A few changes moving forward. Kai no longer. He's going to join the boys on the Global Alpha, which is our other. We've had a couple of test runs of their first Global Alpha edition of Bulls vs Bears,
yep.
And I think you've all seen Richard on the podcast before. The two Richards and Kai are going to run that more sort of US and global stocks based one, and the old farts like you and I, we're going to sit here and talk politics and
the boring Aussie markets. We'll do.
We'll still talk US markets.
Oh, yeah.
We'll just stick to the program. So
media.
Well, media, to be honest, world's single most boring episode of The Call I've been involved in. Zach Riaz is awesome from Banyan Tree, but the list was crap. And we were both bearish, and it was pretty difficult to. Temple and Webster was about the only thing I thought was any good, and that's one of those stocks that I really I've always wanted to buy on a dip, but whenever we've had a dip, there's always been something kind of I like better to buy.
Yeah.
But I love that business. I think it's all the good things of IKEA, Harvey Norman, and Nick Scali in a scalable model. So, but it's.
Do they only service Australia at the moment, or?
Well, at the moment, yeah.
Okay.
But yeah, super scalable. And we bought some of the furniture here when we started the office, and I bought it for home. They're super easy to deal with. Their returns policy is awesome. Like, you would not think buying furniture online is a bit weird, but and you can take a photo of your living room and then place things in it to see how it looks.
Okay.
On their little AI app and stuff like that.
Okay, interesting. Yeah.
And I remember I met a fellow just like at a barbecue once, and he was friends with the family that owned the Good Guys.
Yep.
And the son went out and opened appliances online, and the old man and the son had a big split about it because the old man goes, "No," he laughed at him. He said, "Whatever, mate, you do it with your own money. No one's ever going to buy appliances online."
And he
smashed them. So it is a bit counterintuitive, but I like the scale of it.
Yeah, but I think just in general, like buying everything online is pretty normal now, and that's all it is. Like, basically, if you can give the customers a good experience online, people will just flock to it.
I'd rather be shipped to Guantanamo for a day than go to IKEA personally.
With that maze that they.
Yeah, everyone goes, "What about the Swedish meatballs?" They were actually found that there was large traces of horse meat in those globally in those Swedish meatballs. So that's what I always think about when I'm. As everyone goes, "Oh, the meatballs are great." It's like I am not doing that maze for horse balls.
Yeah, exactly.
Basically.
So I had the call on, the trade on Wednesday, and I talked up silver.
Yes.
So on the Tuesday night, silver made a new high. So I thought, here we go, let's talk about silver miners. And unfortunately, that was the actual high.
No, it wasn't, because I went on the COB on Wednesday afternoon. And it literally was trading 37.30 at the high. And as I walked out, I got onto the train, and it had already fallen back 10 cents. It's never been there again. So but look,
what I would like to say is that I didn't explain it well, but Adriatic Metals, back in 2019, back when companies actually used to come to boardrooms and actually pitch brokers, they came in through the broker that I was working with. 20-cent IPO, I think maybe a 20 million market cap at the time. I could have bought as much as I wanted. Fast forward 6 odd years to today. This month, I got taken over at $5.50 at a 1.7 billion market cap. So that just shows you what is possible with mining investing.
I saw the quote. Is it 27 bagger?
Yeah, it's a 27 bagger. But what you have to understand is that I showed a weekly chart on the call, but I didn't actually get to show within that. There were, I think, 3 or 4 50 pullbacks of greater than 50%.
Yeah.
So it just shows you how volatile it is.
Even high quality.
Yeah.
I mean, we were just looking at Tesla.
Yeah.
On the chart with the boys, and that thing since Trump's been in power, which has been 130 days.
Yep.
Has gone from 200 to 500 and back to 200 and then back up to 300.
Yeah.
It's $1 trillion company.
Yeah, and you just showed
So put little old Adriatic. I mean, 50% moves, and look, poor old silver as well. But it has. I think it feel. I'm so wary of this thing, but as long as it doesn't pull back into the range, it's been pretty positive.
Yeah.
Look. If your Twitter feed starts filling up with silver, silver tweets and retweets, and you're a day trader, sell it immediately, because that is whenever they start talking, silver in 1970s terms, it should be at $300. Exactly, it's like the moment I see that tweet, I'm just like, oh God, we should hedge.
So just to finish off, so Adriatic was the poster child, and then I had 3 of my choices. So Polymetals is one that's actually just gone into production this week. Andean Silver is my favorite of the 3, and Mithril. So main thing when you're investing in mining companies is management. So with Andean Silver, basically the CEO and I think the chairman were deep in on the board with Bellevue Gold, bringing that from an actual explorer all the way to an actual producer. So they've done it before. Mithril, the CEO had a mine sale. I think it was like a $1.5 billion mine sale. And so he's trying to run the same playbook again. And Polymetals are a little bit different. But the thing is, they did the cap raise at 80 cents and it's based here in New South Wales. So yeah, that's one.
Cobar, I believe.
Yeah, that's right. Not too far away.
And obviously on the flip side of the coin, if you look at management and all they've ever done is cap raises, run, no matter how good the thematic is, run for the hills. Because
I will say this, not all cap raises are bad.
No.
But just in general, if all they're doing is cap raising to explore more, then run.
They're
if they need money to actually prove out a resource to turn it into reserves, that's a little bit different than we didn't find anything here. We need more money to try another spot.
Yeah.
Or we're transitioning to the metal of the month, basically.
Yes. So I think there's been a few lithium miners that have now decided to go into fringe metals because that are found near lithium.
Oh, rare earths. That's one. So basically, rare earths was the place one.
So
But
so
what's the main news?
Main news. Yes. Well, will T.A.C.O, Trump always chickens out on Iran. My view is a little bit worried about this weekend, particularly, and I think he has to get involved because the inflation caused by tariffs, in his mind or in his plan, was going to be offset with drill baby drill with lower oil prices.
Yeah.
And he can't get rates down unless inflation drops.
Yep.
Because the central bank's not going to do it. Certainly not until he gets. I mean, he might put Barron as Fed chair at this point. But he's definitely. Power's going to be replaced, but he's got to get oil prices back down.
Yeah, absolutely. Because was it now like 73, 74?
Yeah, and the Strait of Hormuz's been closed for is 20% of the world's oil supply. Conservative. I mean, the last time that thing got closed and there was a bullish oil market, went to $125. But the general consensus is out there: if it's closed for any period of time, and you can get permission from Iran at the moment to go through, so I'm pretty sure the port guy probably speaks Chinese.
Exactly.
But if any extended period of time, it's 90 to 95 conservatively, and that just means.
It means higher prices for everything because obviously energy is the input cost into everything that we consume.
Yep.
And that's why Trump wants that lower.
So, but if he goes in, and I think as well, speaking to Richie Casali today, who's you'll see on the Global Alpha podcast next week. The he loves his US politics, and possibly almost a little bit too much into it, to be honest. But but he's basically going, well, like he said, Trump, no one's listening to Trump at all, and you can even, and he's a bit of a fan of a lot of things Trump's doing. He's going, and you can just see Trump is getting really frustrated, which for a non-Trump fan would be acting like a petulant child. That's his kind of version, like, because he's not, he's sort of, he likes what he's trying to do, but and I really, he's going to have to do something big, because he's right. No one's listening to him. Mm-hmm. He's tried his normal tactics and gone, everyone evacuate Tehran, and we're going to bomb the crap out of you, and it's coming. And then it's like, he's very boy who cried wolf at the moment, but he needs this to finish quickly, because if rates don't go down, he's given away all that money in tax cuts.
That's it. Yeah.
That debt just keeps getting bigger. So.
Exactly, and that's why Elon is not there anymore. He's just
and good, and I think that's good for Tesla. I've got to say, we'll probably get Tesla.
Just another stat on that is that I saw that 15% of China's oil comes from China's daily use of oil comes from Iran.
Yeah.
That's
30% from the back door in Russia, which gets rebadged and sold as non-Russian oil.
Exactly. So so they will want their energy.
Oh yeah, well they've just done a bunch of stimulus, so they're going to need it. And it screws everyone. So the Chinese will be maybe there'll be a love-in. Maybe Xi and Trump will the enemy of my enemy is my friend, or whatever it is.
Yeah. So he'll be like, you still want your oil, don't you? So let's finish this up.
Yeah. So I
so in that case, China would be the diplomat.
Well, China doesn't like to. I mean, the US is never going to let China be the lead, but they might just go, righto, you just go and get us our oil, would you? And then we might give you some rare earths.
Yeah.
I think there'll be a very swift and brutal response at some stage, because diplomacy ain't going to cut it.
Oh yeah,
it's kind of almost hilarious. I've thought that they were voiceovered some of the clips of the Supreme Commander and Benjamin Netanyahu, but it's actually it's so biblical the way they speak.
Yeah.
I honestly thought it was voiceover, and I was kind of half chuckling. And then I'm like, oh no,
they actually mean it.
The speech comes on Bloomberg, and I'm like, what are they doing playing that? But yeah, so interesting times. I mean, look, 10 years ago, this market would have already been down 10%. Cannot believe it's hanging in there. But look,
well, as we said, that's the outlier. Is that when oil spikes, equities usually drop. Oil has spiked, and it's staying there.
Yeah,
and equities so
when oil spikes, equities go down. When bond yields go up, equities go down. When the economy's softening and economic numbers are horrible, equities go down. All three of those things are happening.
And equities have not gone down.
And here we are.
They look like they're starting to roll over, but I'm not totally convinced yet. I mean, I watched the ASX. It did make a new lower low on the daily, so that's encouraging for the bears. But the way it bounced off the lows as well. The dip buys are still there.
The trade of the week later, I've pulled together an absolute corker.
Yeah, absolutely.
I say corker. Ask me in middle of October. But we'll talk about that a little bit later on. But what happened in WiseTech? Oh, Santos was obviously the
so Santos takeover. And the thing is, they actually want 100% of the company. So that's you'll see it in the ads there. Uranium stocks were all buoyed at the beginning of the week. So Boss Energy, Paladin, Deep Yellow all had massive moves this week. And WiseTech. So a couple of the board members who were supportive of Richard White have decided to leave. And wow. But the thing is, they're both billionaires. Like, it's not a mass exit. It's basically they've tendered their resignation. One leaves in, I think, a couple of months, and one in November. So it's not it's not a clearing of the ship, which can happen sometimes in boardrooms, but not so in this case.
Yeah, I would have. That's a bit concerning because he's not going to have.
He won't have support after.
Well, because they tried to find other board members and no one would do it. So, so the short position. That's what I was just looking up now. In Boss Energy in the last 5 days, and Paladin is now still 16%, but it's a global short position here because I don't know the stats, but loads of the US, Japanese, and Canadian uranium miners, except for Cameco, basically. I reckon they should do, Cameco should just do a $500 billion cap raise and just buy them all and close the value gap because they're the only one that's not shorted. So they're trading at like 100 PE.
Yeah.
And everything else is getting smoked. But because the short sellers have been on it, that could be the trade of the century. It's like I'm literally buying exactly the same thing as I do right now.
Yeah, and I'm sure if you look at the market cap difference as well, they could just do a normal market cap, a normal cap raise, and they'd be able to scoop up everyone else.
They would literally be able to buy the top 10 uranium miners, probably. But it's dropped from early May, 26% short in Boss Energy. It's now down to 17.
Uh-huh.
And Paladin, I believe, which we sort of favour Boss at the moment. But the short position had peaked at 19%. It's sort of 16. So maybe there is if there's
still more to go.
They're probably a little bit more worried about getting their Boss down to a manageable 25% short. That's a lot. That's a lot. So that'd take them that'd take them 6 weeks of being the buy side of every trade to get out.
Absolutely. Yeah. So it's massive.
So yeah, we'll
and then here we go. So US stock highlights. So SpaceX, Tesla. That's I don't know if you guys have seen, but one of their what are the Falcon rockets, are they? Or I forget the
Falcon is the BFR, which is the big effing rocket.
Okay. Well, either way, that blew up on the launch pad, and that was overnight while the US
markets were shut. So it's June. It's the 9th, Juneteenth, which is an anniversary of freeing the slaves.
Correct.
Apparently, a bank holiday in the States, so they've been closed while that's happened. Obviously that's not good. It's the first time in a while as well.
Yeah.
But look,
I love how Elon responded. He tweeted just a scratch.
Yeah,
that's how he is.
Well, but admittedly, they used to just throw the rockets away.
Yeah.
That thing could be on its 85th use.
Okay.
So it's still 85 times cheaper than anything Boeing's ever built.
There you go.
So
just a scratch. Circle and Coin. There was legislation passed overnight. So Circle was a $35 IPO. I talked about it last week.
100,
it went to, I think, 160, pulled back.
160, wow.
Closed at 200 on Wednesday night. So it should open up even higher tonight. So
yeah.
So massive moves. And Meta, what was the news on Meta? So they got a new kid in, the AI kid, for $14 billion.
Yeah, well, No. $14 billion for 49% of the company.
Uh-huh.
And it's, what is it? It's called Scale AI.
Something
and
like that.
It's some, I think he's American Chinese he's not Chinese, but he's Chinese of some description. And he's essentially, they basically bought this kid for they valued him at like 30 bill. But Meta have got a pretty good track record.
Absolutely.
Everyone laughed at them when they paid $1 billion for Insta because it was the first $1 billion acquisition.
Yep.
And that went well, and then WhatsApp as well.
They paid, I think, 6 for WhatsApp.
So the adding advertising to WhatsApp apparently is going to add $3 billion in revenue. I'm not sure if it was a quarter, but worst case it's annually. So they're going to rolling out ads on that thing. They're going to half pay off that investment.
Well, the thing is, I do know that within their terms and conditions, they do say that they do track your conversation. So,
a
lot of times I'll have conversations with my mates on WhatsApp, and then when I go on Facebook, some ads that have some of the topics have been discussed. So we'll talk about, say, a jacuzzi.
Yeah.
Not that I'm in the market for a jacuzzi, but suddenly on my Facebook feed, it just pops up. So
it's only really a problem if you're a deviant most of the time. But
but I'm just saying, I think the WhatsApp feed, ads within there. The funny thing about WhatsApp is that they told everyone, "Oh, we're gonna listen in on your conversations," and then some people. So some of the guys that I am,
there was uproar, and everyone just forgot.
Yeah. So some of the guys that I are in chats with are in cybersecurity, and they were like adamant, "We're out." Look, they started a Telegram group and then onto Signal. Everyone else is like business as usual. Just stay on WhatsApp or whatever.
It's the whole thing is like 99% of people just want to live their lives. They're pretty boring. They don't seriously. The most interesting thing I've done, sadly, probably is doing this podcast on a weekly basis. Is and mucking around doing the AI images in the morning for the morning report.
That's it. So either way, as you said, like Meta's has a good track record for acquisition, so maybe they're onto another good thing here.
And they've launched new glasses this week as well. New and improved.
I mean, like they haven't been flawless. I mean, like they did, went too early on the metaverse. They have.
Oh yeah. But they've pivoted and they're still. But you know what? They went too early in the metaverse. They didn't go broke. They're still up, but like they're still up, bloody. In that period where they went hard at the metaverse and everyone was like hating on Zuck, the stock was probably up 10 times.
Yeah, exactly right.
Tesla as well. The robo-taxis in certain parts of Austin, Texas have started this week. And I reckon we were just discussing before when we were looking at the Tesla chart, the goldfish memory of the markets will ensure that everyone will forget about Elon being involved with Trump. And then I reckon his PR people will get a hold of him. And I think there's something like 60 days until they report again. I reckon by that stage, Elon could have everything. It could be all forgiven by that stage and forgotten. But I reckon his PR people, there will be an announcement. Because he's got a mad track record of promising stuff. He cannot physically deliver.
Yeah, exactly.
He's like, we're going to have even the Optimus robots. They got caught doing remote control because he put too short a time frame on the employees getting them working. So never let the truth get in the way of a good story for old Elon. But you wait, I reckon they'll announce something way out there because it'll be like Elon's back, and so I'm pretty bullish at the moment. But as we discussed today, we're just essentially not telling clients about it because everyone hates him so much at the moment. If we even mention him, they're like, no, hate Tesla. So I reckon we could sell $1 million worth of shorts. I don't reckon we get 100 grand worth of buys.
Exactly. So we have a tax effective instrument, and Tesla is one of the stocks involved. So it's Microsoft, Nvidia, Tesla. And basically what we found is that unless you drive a Tesla or you're an Elon fan, you just will not invest. That's the one stock that people will adamantly be like, no, I'm not investing because of that.
Yeah, no, but when those robo-taxis, all of a sudden you
absolutely. Like,
you can buy one of those and earn a yield off your car and you don't have to.
Great passive income.
Oh, it's like it's a driving vending machine or a laundromat there was a big article in the AFR this week about.
It's just another asset. Yeah, that produces income.
But cash flow assets, high cash flow assets like that. Mm-hmm. There's an article in the AFR this week that was like the super rich own shit tons of laundromats, like those massive cash flow positive businesses that are always churning and yielding. This could be another one, basically.
Yeah.
You don't even have to. You wouldn't even have like if the laws were relaxed. It would drive itself off the lot. You could go and tell it to go. Well, you could tell it to go to Perth to drive Uber, and
Well, I mean, like that was the whole thing. Is that when there was the first surge of electric vehicles? Is that like that they said that it would actually change cities. So if it gets down to a cost where it's actually cheaper to just buy one of these cars, have it run around, people just won't buy cars anymore.
Yeah,
they'll either just invest in it like an actual business, or just if the cost of rides go down.
But imagine if you could, and the late model Teslas as well.
Mm-hmm.
If you drive to work instead of paying for parking, send your car off to earn your money all day.
Yeah, exactly.
Like I only just thought about that.
So maybe short, parking spaces in Sydney are super ridiculously expensive.
To buy them. Yeah, right.
And actually park the car. So yeah, maybe that's a bit of a business model you want to short.
Potentially.
Okay, so
look at us with new ideas.
Here we go. So this is for the week. I I mean, like, look at that. Mastercard and Visa down. Interesting.
Yeah, volumes are down because the retail sales numbers have been crap.
Okay.
The consumer went from softening to like, jelly this week.
So yeah, interesting. Like because obviously the stock market isn't the economy. So one number that did surprise me this week was the employment number here in Australia. So they expected I think it was a plus 25. It came in negative.
Yeah, but it's been 25,000 above the expectation for 3 months in a row.
Exactly, but this is the first time where it's actually missed. So interesting but that's here in Australia. Like
maybe
non-farms, not too sure because obviously they'll just revise that number.
Yeah, well, but it's the revisions getting worse. I think it was 80 last month.
Yeah.
Even that.
Commodities. So, platinum. That's the big one again. 13%. So, platinum's made another new high during the week. Silver made another new high during this week as well, but that's pulled back slightly. Uranium. So, Sprott raised $100 million for a cap raise, but they actually got interest for $200 million.
And they took the lot.
Yeah, exactly. So they're like, okay, well,
and that is specifically to buy and stockpiles physical uranium.
Yeah, and obviously on the back of that, all the producers,
all the risk managers of all the shorts in those uranium stocks went, maybe you should reduce, guys. And there was an announcement of the G7. They're all scrambling for uranium and nuclear. Like all 7 of the G7.
Except for Australia, where we don't want to have nuclear.
But we're not in the G7. We're at the G7 meeting, but we're like G freaking 14 or something like that. No, and we one of the most interacted tweets with this week I've had out there. I pushed out a picture of the G7 leaders all standing there, and it said one of them is just like wants nuclear, can't find uranium. But then there was like the Canadian Prime Minister standing there going, "Come on, guys, come to me. We got plenty." And I tweeted, meanwhile, Albo's picking his nose and Australians are against it. It got 3,500 opens. So I think because Western Australia got a massive price hike in their power bills this week. So and everyone's going like, well.
Mate, and they've got plenty of natural gas there.
Yes, they do.
Like, they've got plenty of resources. They shouldn't have expensive electricity. But, I'm not running the country.
No.
So that's commodities.
Let's quickly go back. That disappoints me. Gold. We've had missiles plenty.
Mm-hmm.
I believe Iran's.
And what you should note is that's the spot price of gold. The gold miners themselves have all been hit.
They've been walloped.
Exactly.
We've Israel's spending $280 million a day bombing Iran. And
I knew missiles weren't cheap, but I didn't realise they're $280 million a day.
Yeah. And again, people, you've been listening to us, buy defence stocks because someone's going to make those missiles. But gold didn't go up. And the price action's been pretty horrible. I think we got out of Newmont first time apart from your awesome buddy junior miners.
They're holding in there.
They're holding in there. But the first time in nearly 18 months we haven't had a gold miner, a major gold miner or physical gold. I feel a little bit naked. And I still think the US dollar is going to get walloped. But that price action.
Well, as you said, like basically. Like when everyone's calling you about gold, like when it's the flavor of the month, that's the time to actually get out. I understand that. Like that's how markets work. So generally, when all the Johnny come latelys want to get in, the market's going to teach them a lesson.
Ironically, I saw Goldman Sachs call it it's a sure thing to 4,000.
Oh, here we go.
No. Then that was pretty much the trigger for me to get out.
Yeah.
And I walked in the next day and said, "We're getting out of Newmont." So and Newmont's held in really well. The Aussie miners has been killed. So
and I think that's just based on market cap. Like obviously, just being listed in America helps. So Cameco, Newmont, obviously listed in America, so they got the dip buys over there.
Well, and it's the only gold miner in the S&P 500.
Yeah.
So whereas over here we're a little bit spoiled for choice.
Exactly.
Anyway, we can move on. Oh, yes, buy the dip.
This is a cracker of a trade. So I think the bottom is the key numbers there. But yeah, I'll let Mark explain it because
So
this flew off the shelves.
it did actually. I've never.
It actually sold out, isn't it? That's the whole thing.
It was 100% closure rate of the people that had access. No, which has never happened.
Yeah, no, but I'm saying like we've actually closed it now. So
well, I mean, certainly, there's a few stragglers. So I'm always open to. But we've closed it at the current price. So because I was concerned about.
Yeah. So if something happens over the weekend, vol spikes. It's not going to be.
This strategy becomes more expensive immediately. Yeah. So we're trying to take advantage of the relatively low volatility, despite it being at 22. So it's $19,700 down, and you get 100 grand exposure to the S&P 500 over 2 years. But where the buy the dip part comes in is there are these entry features we can use. And this one, and I was genuinely surprised that this existed. It's called a look back feature. And
a look back.
Yes. So what it means is, for the first time ever in financial markets, Elliott Wave people would be awesome at this because they'd be able to use hindsight. They get to use hindsight to take advantage of the lows. So this period here, obviously you can see the average max drawdowns is the pink part there. This is the average monthly return. October gets a bad rap, right? Yeah. Because October's the month where all of the weakness from August and September capitulates and everyone vomits out at the start of October. But October is actually a positive month. Mm-hmm. But that's when 2 of the Black Mondays have happened and all that sort of thing.
Oh, and the GFC.
So July. So basically, we set 3.5 months. So the middle of October is when this thing. So between now and the middle of October, your entry price on this is the lowest daily close of the S&P front month futures. Yeah. So and we worked, and then the joy of AI these days means that I don't have to have a coder to backtest, but I would never have backtested something like being able to get a low of a period. Yeah. So it was a bit of a unique thing having to backtest with the benefit of hindsight. Mm-hmm. So if you bought the low in the July-September period, well, July to middle of July to middle of October is the best period. These stats are based on just July to September. Your average 24-month return in the last 100 years is 10% better than the average return of the S&P.
Fantastic.
Nearly double. Yeah. So look, the markets are, as we keep saying, markets are silly highs. There's seasonal weakness, and then you get to come into the Christmas bounce, if it happens. So look, there's a lot of what ifs here. Yeah. However, the seasonality stacks up very well. There's only one outlier with the seasonal statistics. If a big performance in May can be quite
That throws the numbers out, does it? Or?
Well, if a performance of more than a couple of percent in May or 5% in May, but obviously we had Liberation Day, so I don't know whether you treat that as an outlier or not. Yeah. But apparently, if you get more than 5% in May, it's a bull market year nearly every single time. But look, we've also got the steepest rally in history out of a technical bear market. So
let's just play devil's advocate. Like, let's just say this thing keeps rallying. We're going to get the lowest point anyway, and then we're long.
So it doesn't really matter.
But if we do get,
say for instance, we get the dip, and I think that I've always been in the opinion we'll have another crack at the low, or somewhere near the low, or at the very minimum in the middle of the range. Trump's got a bunch of trade deals that need to be done. The economy's softening in the US with the retail numbers. So I think there will be uncertainty and then high volatility, and then the economic numbers will soften as well. But then he'll get rid of Powell.
Yep.
Interest rates will get absolutely slashed, and then it's whew. Yeah. And then but then from that point, well, you've got till July, the end of June 2027 before you've got to get out. So why it sounds so good, and the objective has generally been, it sounds too good to be true. So I just got to be very upfront. The first 19, so you put 19,700 down, and then you get 100 grand exposure. The first 19.7 percent goes to covering your capital.
Yeah.
So realistically, until it rallies 20%, you're just getting your money back, right?
Mm-hmm.
You can, and you got to think about it in notional terms. So some people have said, "Oh, well, you lose all your money." I'm like, no, because it's really 20% because you're getting 100% notional, $100,000 notional. So, but this thing, if it keeps to the average of 25%, you would make what you would make putting 20 grand into the stock market at the low.
Yeah.
But you would have to pick the low.
That's it.
And
whereas this guarantees
whereas this guarantees it. But when it gets to, so if this thing bounces 40%, you double your money.
Yeah.
If it goes 60%, you triple your money. So, and that has happened. I mean, just look at April. We bounced 25% out of the April.
Oh, yeah, that bounced from April. I mean, like, that just shows the kind of market that we're in. Like, you know, the buy the dippers are out in force.
I asked one client today, so, you need a 20% bounce. He goes, "Oh, well, are we going to get a 20% bounce?" And I'm like, we just had one. Like, we literally just had one. Like, and it took 4 weeks.
Yeah.
So look, if it, bit of a harebrained scheme and it's very specific, but if I'm right, I'm going to be right.
Yeah.
So, but look, and this thing will be available. Having looked at it, this is almost a trade we should do every single July.
Yeah.
Essentially, to play that seasonality. But I haven't had a chance to tweak it. So,
I mean, like, the thing is, like, just knowing that there's a look back feature on certain events as well. So, this is statistically the weakest three. But like, if we see a lot of uncertainty coming up in the future, in January,
it was all born out of a conversation that I had where I just went, we're in a lot of cash again because we're near record highs, and people are going, "Oh, what the hell's going on? Why aren't we allocated?" And I'm like, don't you remember what happened in April? And I said, but I think the market's going to dip over the next 3 months. And our connected straight pro goes, "Well, why wouldn't you just use a look back?" And I'm like,
"What's a look back?"
Yeah, what's a look back? And how the hell do they? So, but obviously, you're paying via them. They're effectively taking the first 20%.
Yeah. So
that's where they're paying for it within the strategy, and then and how you're paying for your leverage. But so you do need a good result. But anyway, it's an absolute corker. If you go on the website and send us an email over the weekend, I'll see what I can do for you. You've got to be S708 though. So,
great.
Yeah.
So S&P 500 buy the dip.
Indeed.
That's fear and greed. So I'm surprised they're neutral. We've had a little bit of a pullback in the S&P. But the thing is, like,
it should be meh. It's like it's been like, I thought we would go to a bit for a war going on, and I think the equity market's just like doesn't care anymore.
Yeah, exactly. Okay, so with that, and here we are near the end. Were you right last week? I haven't kept track.
No, I was bearish, and you were bearish with me, and we were both right.
Okay.
But like by a small amount, essentially.
So what are you for next week?
Yeah, I'm going to have to go bearish because I think there's going to be some bombs dropped. But I still think we're sideways for 3 or 4 weeks.
Mm-hmm.
I think the trade deals aren't that far away, and the leading indicators like the consumer are getting pretty hammered. I'm not going to say payrolls is going to be the big dog again because it's a broken record. But the consumer numbers, everyone's starting to freak out a little bit, and he hasn't done any trade deals.
Yeah, true. So I'm with you. I'm bearish for next week. So what I have noticed myself is, I'm a charts guy. On the daily charts, I've seen a few new lower lows, especially in Europe. Some Asia, China's pulled back a little bit here. So obviously, XJO made a new was it a fresh high at 60,000? Oh, sorry, 5,600 thereabouts, and has pulled back. And today made a new lower low. So yeah, that's kind of like where I'm thinking. I think it just, I'm not expecting a crash unless we get more action out of the Middle East.
I think there's big bombs go off and I think the markets are kind of cool with Iran. They don't really care. I think they all just want oil prices down as well. But I think that'll sucker some people into trying to short the market, and then that's where I think we'll end up sideways for the rest of the month. Is this Iran-Israel thing? There'll be a moment where everyone goes, "Oh my God, we've got to get out," and then it'll immediately bounce back up, and that's where I think the sideways in July will be around, and then I mean, again, being very specific, but like I don't see, and then we're going to have earnings start,
so
July as well, so I think the banks will be about 3-4 weeks away.
Okay, fair enough. Okay,
and they're not going to be good because they're started in April.
Yes. Oh yeah, because we had that Liberation Day.
So that's that. So all the earnings were great, and everyone. So I have said this since the April drop that I thought it was going to bounce back, which we did, and we nailed that period. And then I was saying I didn't expect. I expected the next leg down to be the economy and the next earnings more in July, August period. And thank God I haven't shorted. Because I'd have been stopped out 3 times. But anyway,
I did short last week, but then I covered for pretty much break even.
But fair enough.
Yeah.
Like I mean, the only reason I didn't short is because we had so much cash.
Yeah.
So never thought I'd be selling gold stocks on a Middle East conflict. So
and
I think that's it, mate.
Thanks for listening in.
Yeah, and look, I've I obviously get a few comments here and there on Twitter and things, but we're if anyone's got any feedback, they want to send some comments through, like some reasonable comments, not just be better or something like that. And
constructive feedback.
Well, yeah. But if anyone wants just to look at a stock or ask any questions, I mean, we're doing enough for Ausbiz. We may as well do it for the people that watch the podcast.
Exactly.
So if you want an opinion on a stock or whatever, or you've got a question about markets, just send it in. Either JTrader 8000 or Mark Gardner on Twitter as well. So you can find us. We're bloody everywhere. So and we can see what we can do in terms of trying to give you guys some value.
All right. Thank you.
Thank you.